Hello traders, good morning, good evening, how are you today? Happy Monday and wonderful week to all. Please give me some okay that you can hear me. How was your weekend, guys? I hope you had some good time. Do you enjoy the World Cup matches? Several surprises in a row, right? Germany to Mexico, Brazil, Switzerland. Oh, what's going on? Big surprises, right? On the very beginning. And of course, one Ronaldo scoring a hat-trick against Spain. Is crazy. Oh, of course, John. Of course, Iceland is like, oh my god. Well, honestly, it was a really good start to the event, and we can just enjoy, right? That's all. All right, guys. So let's begin. Weekend is over, and it's time to be back to the business. Let's quickly take a look over the fundamental part, because this is going to be a very busy week. It starts tonight with the monetary policy meetings minutes, and we have in about 25 minutes the speech from Draghi, which is going to be for several days in a row. Tomorrow it continues, Wednesday as well, and look at Wednesday, critical day. Speech from Governor Love in Australia, Draghi, Kuroda, the Fed Chairman Powell, the GDP in New Zealand, and then the cash rate in Swiss, Britain. Very busy week ahead, and Friday we have the OPEC meetings to begin. So it's going to be fundamental week, which could cause accordingly some momentums, change some momentums, and it's very important not to get any kind of overexposures on such weeks. Keep it easy. So if you choose, let's say, one currency, sorry, not to play with that on many different variations like euro dollar, euro pound, euro yen, euro Aussie, euro CAD, euro franc, and etc. Okay, just as always, choose the ones that fit you best according to your risk management with the strategy or strategies you use. For all those of you who are watching this video for the first time, welcome on board. First of all, I would suggest you go to the members area and watch the video tour. Then in the trading report, which is this, you get it twice per day, basically after every single live trading room. So now we do the live room. After that, you got this report with setups. Watch the video. It explains how to use these reports. In the comment section, you find all the most important webinars to follow, to be able to follow exactly what we do here in terms of cycles, divergences, convergences, and all the setups we are working with. On the scrolling lower, you will find the explanation for each pair, where we are bullish, where we are bearish, what's for long-term, short-term, etc. Short-term ideas, indices, commodity CFDs, and of course cryptocurrencies. On the watch list, when you simply click on any of the pairs, it opens for you the chart and the plan as we have it according to the directions. Majority of cycles we work with are weekly and daily combinations. When we have them, we are good in conservative trading. When they are different, then that's where the aggressive setups starts to take place. This is most of the time in the markets. There are no clear trends. Trends are only about 30%. Sometimes it looks like even less of the market movements. And you need to always remember, we need to learn to swim in between these conditions. Sometimes when weekly and daily are synchronized, the moves are so good, which we even don't find the time to rejoin, right? It's like straight move. And sometimes when the cycles are different between the weekly and the daily, that's where we start to scratch our heads and asking ourselves what's going on, right? Because the moves tend to be less clear. So it's very important to read the cycles correct from the very beginning and have proper plan for validations and mainly for invalidation. The first one I would like to start with today, not as always, is the the natural gas, sorry, simply because I just sent a few minutes ago an update. We have our investment trade running here. Where's my epic pen? Here. We have our investment trade running from the 260 from February this year, and this is the time to first cash out. The reason is the way it develops. Here. It's a special cycle. Divergence shows some sign against. We don't want to risk that. The ideal scenario for us would be something like that, and then we can always bring in the portion we cashed out. And we do it partial cash out, not full, for those who can allow that for one reason. Because according to the long term, we have a monster to go with, right? And we can, of course, watch it going much higher for the very long term. But on the short term, it looks like very good reason enough for us to take part of the profits. So that's why I wanted to start with that. So this is, of course, for all those of you who are involved in the investment. All right, now we are back to Forex. We start with the report, and we cover the European pairs, pound pairs, dollar pairs, and the rest. So as always, Monday sessions are the longest for us because we have to cover the entire list, prepare the plan for the week, so we can follow up during the week with the developments of our plan. So the euro dollar is the first one. We were bearish for the euro dollar for long term, according to the weekly cycle and the daily cycle combination. Yes, there is a bullish hidden divergence forming. No, there was no cycle that was kind of ready for that. So the way it looks like, the euro should soon start the correction to the upside. Probably something like that. And then very likely new rally. Dropping to the daily chart, we are looking on the cycles we have, and this is what was forming. So once we cross the 118 area, we say this is our time to look for sells. 118, in some occasions 120 would be acceptable. Previous week with Draghi movement to say that we are cutting the quantitative easings, the euro dropped, and the bearish hidden divergence made its move. The question is, how far can that go? I don't think it will be too much. I think we're very close to the end where we would start experiencing the buys. But in order to be able to buy against the current weekly and daily drop, which is very well synchronized, we must start to face divergences and false break combinations. We don't have any false break currently on a daily. We don't have any false breaks currently on the 4 hour. We don't have higher highs. We don't even have triple cycle up, double cycle down, and breakout. Right? Nothing is in play for us yet. Therefore, the euro dollar remains bearish. Sell the rallies was and remains the plan for us. Next one is the euro versus the pound. According to the weekly cycle, this is the one we trade. Triple cycle, divergence, false break on the weekly, meaning we are after sells. This is a weekly chart, weekly cycle. Therefore, the synchronization must come with the daily, so the daily hints for a sell. Previous week, the daily was holding the top of this channel, double top, bearish divergence. Daily became bearish as well. And the 4 hour chart is normally that's the one that provides us some setups, is now on the hot list. So what do we have? First of all, the range. Currently it's a bounce from the range, but as long as we are holding here, we are after sell. We got this trend line broken. We can have that retesting in this area, and we would be after sells there. What we currently see is a bearish hidden divergence developing on the 4 hour chart. 1 hour chart is forming for us the double wave cycle. It might even go and improve some kind of move like that for us here. We will be marking the last trend line that fits in the divergence, so the 1 hour chart would fit the divergence with the trend line, right? The highs with the lows. Validation will be with the breakout. Once that happens, we are okay to deal with the sells. Invalidation for that is the last high. Invalidation in that case means if we break above, this view of the cycle is not correct, and we will have to adjust according to the new development the market will provide us. Note, it doesn't change our weekly cycle. For us, every daily rally is still a sell. It will just change the timing for the sell. So as long as we are below the invalidation area, we are after sells. If by any case the invalidation level breaks, it might turn to be double cycle on the daily before the next portion for sell. And that's where our accuracy have to be. So with time, we have the synchronization weekly daily. We time our entries with the 4 hour. And if the 4 hour is ready as well, we can drop to the 1 hour. So euro pound, we are after sells as well. Euro versus the yen. Now this pair is one of the only ones. By the way, if there is any question, guys, write it down. Okay, once I finish with any of the pairs, I will go and reply that. So if you have anything to ask, please do so. I will cover the answer right after the end of the pair I'm currently talking about. So euro yen is the only one that we don't have real cycles at so far. Take a look what's going on here. We had a double cycle several weeks ago. That's why we traded our sells on the previous several weeks. We got our target by reaching the 38.2. Weekly cycle is over. Then the euro yen created this double cycle with a bullish, mini bullish divergence here. This target also was reached. Let's take a look on a daily. This 38.2 also was reached right here. So we don't have this cycle as well. So what can we trade here? So the answer is very simple. There is no cycle combination, which means no big money is involved in the euro yen. So the moves can be more random, the moves can be surprising, the moves can be not technical sometimes, most of the times in such cases. And that's not one of the best pairs to trade. For those who love to trade this pair anyway, when we don't have the cycles, we trade with divergence combination. So the question we have to ask ourselves is, what is the last divergence on the weekly? Bullish. What's the last divergence on a daily? Bearish. Right? Therefore, again, we don't have any agreements between weekly and the daily. So we need to drop to lower time frames and ask ourselves the questions. What is the last divergence we have in the 4 hour? In that case, it was bearish as well, which now seems like creating kind of convergence for us, even here. So now we have the short-term combination, daily bearish hidden, 4 hour bearish regular, and bearish convergence principle. Therefore, as long as this area holds, this is for sale. We don't have the targets to trade with according to cycles. Therefore, we trade the levels. Levels of Fibonacci retraces of the last moves, Fibonacci expansion of the cycles on the corrective cycles, timeframes, daily or 4 hour. Or simple, until the moment you get a divergence against you. So assuming that we will get some continuation from here, once we get this divergence against us, it will be time to cash out. Okay, so this is what we do more aggressively if we don't have the cycles in play. We don't have the levels, we don't have the levels to go to, so we rely only on the divergences, basically the momentum. Divergences, convergences, okay? So for the euro yen, short term only bearish while below invalidation. Breaking above the invalidation will simply bring both directions in play. because then no cycles, no divergences stories. Therefore, both directions will be completely in play. Meanwhile, short-term bearish as long as we are below this invalidation zone. Okay. Next one on the list is the Euro versus the OZ. Beautiful pair, beautiful movement. Let's go back to the weekly and see what we faced here. That was the long-term range for us. This is the triple descending cycle that we had. That's what makes it bearish for us. That's why we enjoyed a beautiful move to the downside previously. According to daily, we don't have any specific cycle to work out with. That's a double cycle here, no real divergence in that place. So we would assume that it can easily turn down and start to make the move. Weekly is bearish. Daily is bearish, hidden divergence. Starts to look wonderful. We need to drop to the 4-hour chart and start looking for the setups. On the 4-hour chart, this is what we were dealing with. Double cycle to the downside with each of the legs to be triple cycled by itself. That's why we would expect some beautiful correction, which we got. And now the question is this correction is over? To be able to answer this question, we need to ask ourselves, corrective cycle could be only in two variations. Variation number 1, 2 waves up. Variation number 2, range. That's all. That's the two corrective cycles that we have. Do we have a range here? No. We can't have a range here. The only thing we can do here is kind of a channel that it's building up, or wedge, or you name it, and that the idea would be in something like that, together with the breakout. Is that really beautiful and classical? I wouldn't say so. The way I see that, again, I might be wrong here, but that's how I see that. We have triple ascending cycle, meaning 1, 2, 3. Each leg is bigger than the previous one. Okay, that's what we have. Now, if we drop here the levels, look what happens. We got, on a triple cycle, we got a level that fits a special cycle. 361. Very extended level. Now, that can fit also in triple ascending leg because each leg is bigger than the previous one, which makes the 157 area to be critical zone or possible sell. So if we got this triple ascending, and if my read is correct here, that means that this is the correction area where from we require the second leg. In order to be able to measure that, we need to take the triple cycle, drop the Fibonacci expansion on it, measure the correction down to here, and boom, voila, we get also confirmation for 61.8 expansion of this cycle. So far, so good. We have the levels, we have the divergence developing. Now we need to see some setups, which means the 1-hour chart also currently developing this cycle for us. On the second leg from a 4-hour, this is what the 1-hour is building up for us. So that's where it starts to be interesting for the possible reversal. What do we want to see here? Very simple. We would like to see, first of all, false break. Why? Because it's a great representation to the end of a rally. We would want to see the bearish divergence combination from the time frames, daily, 4-hour, 1-hour, the ones we trade with, right? We would want to see a trendline breakout for a confirmation, or by ideal, lower lows. That's how we define when the momentum changes. Did the momentum currently change? No. So your OZ looks amazing, but you know the rule. If it looks amazing, it doesn't mean it will be amazing, right? We have the level, we are building up the confirmations, we wait for the setup. Let it happen. Let it happen. Let it form. Let it complete the structure before you jump in and trade. One of the common and one of the worst mistakes we can do as traders is what? Force something to happen. Right? Let's say like, oh, that looks amazing, that's for sure going down, this is the worst thing we can do. Trade without facts, trade with hope, wish, or expectation, or rumor, or whatever someone somewhere said or sent, doesn't make any sense. Wait for fact. I always say that, always will repeat that. It's important that you remember that to yourself. Why? Because the temptation is huge when it comes to trading. Only you have the control over your own temptation. Only you. Okay? And you control that by reminding yourself these little things. So the euro versus the Oz definitely is interesting. We are after sells. We are waiting for the combination of the for the confirmation and the setup as we just showed here. First of all, the stop, false break, divergences, and then according to your aggressive skills as trader, you have the trend and breakout for more aggressive approach, moderate approach, lower lows as conservative. Mandar, for your question about Telegram groups, you should receive an email. If you didn't, please contact support team. They will help you to join. All right, guys. The next one is the euro versus the Canadian. Another pair we have been trading for the short term. So just to summarize up for the euro Aussie, we are after sell. We are waiting for the setup, and that's around the zone of 157. Slightly higher, slightly lower, more than acceptable for us. Euro versus the Canadian. Weekly is a triple cycle for us, and the double cycle at the end. The divergence is there. We are bearish. We expect a bearish continuation. However, in terms of the divergences, the last divergence of the weekly is bullish hidden. Why do I mention that? For one reason. Daily, we were trading bullish on the short term on this rally, and we are looking to switch only to the bearish. Now, daily has a bearish hidden divergence for us here and here, both sides. And now I have a question for you. Is that a good bearish hidden divergence to trade? I got asked a lot about it on Friday after the sudden drop, but here comes my question once again. Is that a good bearish hidden divergence to trade? Who can answer me here, guys, please? Who can help me out? I have no one leg, I have yes, and I have no again. Who wants to try else? Try, guys, try. You don't try, don't know, right? No, yes, yes. Okay, thank you, guys. So the answer is no. The reason is very simple. In order for a hidden divergence to be valid, two things must happen. One, the lower time frames has a confirmation, which means also the divergence in the same direction. Lower time frames had it. So from one side, the bearish hidden divergence here is amazing. From the other side, the second filter for the hidden divergences, which is very important when it comes to cycles, right, is that the higher time frame has no divergence against you. And when I showed you the weekly chart before, I mentioned this is a bullish hidden divergence. Therefore, the last divergence of the weekly is against the daily. If the last divergence of the weekly is bullish, then the daily chart must bring two waves correction for us, not one wave. which it's doing right now. Is that okay, guys? Is that clear? That's the two things you always have to ask yourself when you deal with the hidden divergences. Do I have the confirmation? Do I have anything against me? If the answer is yes on the first question, no on the second question, boom, voila, you have a good continuation. So we are confirming the second net. Costas, well done. William, well done. Everyone who said that, very, very good. Everyone who said no is correct here. So the thing is with the EuroCAD that it's building up a second leg. In order to be able to find a stop for that, we need to drop Fibonacci expansion on the corrective cycle, and that's our levels. We would like to see this level or this level in play before we form the reversals, setups, and go for sell. From my point of view, the second area here, the 155, is critical and much better to trade. Why? For one reason. If we drop the Fibonacci retrace on the double cycle we had before on the daily, look, 1, 2. We get the 50% right in play on the same zone. We call that magnet zone. Okay, that's classical and correct. Why 50% if it's double cycle? For one reason only. This is a classical double cycle. 1, 2. What classical double cycle means? That on each of the legs of the blue cycle, we get another cycle by itself, triple. In order to be able to see that clearer and better, take a look on the 4-hour chart and you will see that much better. Look here. 1, 2, 3. 1, 2, 3. Okay? Of course, we can draw it a bit more accurate, but you get the idea. Let me correct it. Here. Each of the legs is a cycle by itself. So it's a classical cycle, and this is why 50% level, which means 155, 156 right here, would be simply the best area to try and to trade from for the sell. And this is our exact plan for the euro versus the Canadian, for the long term and for the short term. Meaning, for the long term, we still want to see that going up. For the short term, we can still trade that going up. If we get, and I repeat, if we get a buy setup, everyone with the strategy he or she uses, of course, because everyone use different strategies, right? Don't buy blindly because it has a chance. Wait for the setup. I always say that. Okay, look for the setups. It's very important. So this is the euro versus the Canadian. Now I'm going to answer the question. Aristos or Aristarchos? Sorry if I don't said it correctly. What if in the lower time frame have bearish divergence? If I understand your question correct, right? And the higher time frame have hidden. Yeah, that's the thing. That's exactly what I said. Always the higher time frame is stronger. Always. And that's why when the higher time frame is against you, you require the correction to be in two waves or a range. Why? Because it's a corrective cycle. Clear? So you want, when the higher time frame is against you, you want the corrective cycle to complete. Corrective cycle completes in two waves or a range. That's the only two possibilities for a corrective cycle. Okay? So I hope I answered the question. Okay, Mandar, now you have a clear view, right? So guys, once again, quick repeat. We have the two levels. One of them is very close to right now. The other one, which would be ideal, is the 155, of course. Now, if we get here some false breaks and lower lows, should we keep dealing with the short-term buys? No. We switch and look only for the sell setups from that moment. Okay, so yes, 155 would be ideal. No, there is no guarantee we are going to get there, and all that because the weekly cycle is still bearish. That's what we have. So we still in stronger long term sell. Any questions as for now about that? Good. Next one on the list is the euro versus the kiwi. Where's my euro kiwi? Here. Now, the whole thing here with the euro kiwi is, and I want to take you back to this area. We got a triple descending on the monthly, which means we are after correction. Correction could be in two waves, or correction could be in a range. So for us, the plan is simple. Every time we got a drop, we are looking for long-term buys. That's the plan, very simple. The weekly cycle had for us something different. That was a double cycle or a triple build here, which means we would like to see the correction down in two waves or a range. Two different variations, the monthly and the weekly now, right? What about the daily? The daily is forming for us the two wave cycles, and it is on the bottom of the range. So the previous week we had our sell idea, which means we wanted to go and see the sell taking place. We got the rally, we got a beautiful sell all the way down. Now the question is what's going to happen from here. So as we said, according to monthly we want every drop and buys. According to weekly we also want corrective cycle, which we get. Is that the end of the cycle? In order to be able to answer that, we drop the weekly Fibonacci retracement, and that's the level we have to reach in terms of the two waves. Did we reach this area already? No, we didn't. This area is valid if the correction is going in the two waves. The alternative for the correction would be a range, and this is what we currently face on daily. If it's a range, it might not reach the 38.2 or 50, right? So for the euro versus the kiwi, that's exactly what opens for us possibilities for both directions trading. The current momentum looks bullish, but let's ask this question. Did we have a false break already? Yes. Here. Do we have a higher high to create the new bullish momentum in that scenario? No, not yet. Right? Do we have it on the 4-hour chart after the false break? No, we don't. Well, not yet. Therefore, that's exactly what gives us both directions to be possible traded. Because according to the first view, we can go to 38 to 50. According to second, if this is only the range, we might block it. But we need to turn around from here, which means higher highs. Did we have any of this? The answer is no. Therefore, both scenarios can still happen. We can go and make it towards the 38 to 50. We can at the same time start the reversals and make the new highs. I still think that there is a good chance we are going lower here. Technically, that would be more correct, and this is why I think so. That was the first cycle, the correction cycle, and the 100% expansion falls in exactly on the same place. That's why for me, I would prefer to still experience that. More than that, look at the first wave. Wave, two-wave correction, down. Here, move, wave, two waves correction, and possible, down. So that's why, from my point of view, that would be ideal scenario. Will we get the ideal scenario? Of course, we cannot know in advance. But as long as we don't have the turnaround for higher highs and convergence, we can say we have only one direction to trade. So both directions are completely acceptable with the Euro Kiwi. I still prefer to look for possible sell setups as long as we didn't complete the convergence here, due to the reason I just explained. The last one on the list is the euro versus the franc. For us, it was and remains bearish. 116, 115, 116.50 was our zone for sells. Unchanged. Nothing changed here. Keep an eye on this pair for one reason. We do have the speeches from Draghi this week, 3 days in a row. We do have the cash rate in Switzerland later this week. Of course, that could be effective for this pair. One thing that could be in play here is pretty much the same idea like we had with the Euro CAD. This is to be the first cycle, okay, which is broken to triple of the blue correction, and one more. Definitely a possible scenario, like the Euro CAD, which we covered before. Okay, so we do have to keep it in mind. According to what will happen with the news, we would probably see the next view, but the plan was and remains. We are bearish according to weekly, we are bearish according to the daily with this convergence. We are looking for sell rise. That the combination must come with the daily 4-hour chart combination of the divergences and pullbacks, and once they fit, we can trade even the 1-hour chart. Remember, 1-hour chart could be traded only when the higher time frames, 4-hour daily, are synchronized and have no signs against you. If there is a sign against you, 1-hour chart could not be in play. I'm not even talking about the 15 minutes, okay? That's too brutal. Unfortunately, so many traders tried it, but it requires much different approach. Much different approach. When you deal with the money flow, 15 minutes cannot be in play. It can be only for scalping, not for money flow trading. Impossible. Next on the list, basically we are finished with the euro pairs. Any questions before I move to the pounds, guys? Good. So just 1 second, please, guys, and I am back. I need just 1 minute, okay? I stop the sharing for a second, and I'll be back in short. I'm sorry, guys. What is that now? No, sure. Yeah. Okay. You should see my screen now. Okay. Pound dollar is still bearish. We were here after sells on the zone of 134, 135. It had a potential in the previous week towards 136, never did so. It did hold the 134, 135 area beautifully and dropped lower. The question is what's coming next. So here is the thing. According to the weekly cycle, we should be looking for the cells all the way down to 50%. And here is the thing. We are right there. Agree? We are right there. So what does it mean? Are we for are we for buys from now? In order to become for buy, we need the bullish signs. First of them has to be divergence. The last divergence we have on the weekly is bullish, hidden. That's good. Now there must be a divergence with the daily, and there has to be also the double cycle correction or orange correction, right? This is how we know the cycle is over. So this is what we have on the daily. On the daily, we do have a bullish divergence. We do not have two cycles. This is the second cycle developing. So I'm completely not sure it's over. I do think that this zone would be the ending part for the pound dollar, and from here we should turn around and pretty much strong, but we don't have that yet completed. For that, drop the daily cycle. This is what we get. 61.8 is 128 area. Right? So yes, it can still happen, of course. This is the first clearance area. This is the second clearance area. It can definitely go and take it before the turnaround, right? But due to the fact that first leg is so massive, straight, the correction down here might be slower. So if it will form for us, for example, at that moment, 1, 2, it will be good enough to start and work with. Take a look on this scenario, what you see now. Take a look on the Euro Aussie from weekly chart on 2000 and here 7-8 straight move, and you see what happened since then. This is how it slowly started to scroll without any clear cycle definitions. So that the same thing might happen with the pound dollar currently. When the first leg is so extended, like it happens right now, you see that? Where is the daily? Here. Basically, the slowdown might be exactly like this. And that's why we should not rush into a buy position before we have several facts. It could be an investment from around the 130 to 128 area, and then you are free of basically free of setups, right? You then can actually work with lemon without any specific setups, just patience in that case. That's option number one. Option number two is look for this combination, which means let the false break happen. Since we want to go with the weekly bullish turnaround, we would like to see the correction over for two false breaks, higher highs, correction, and buys. This is a daily chart. You understand how long that can take, right? That's why, meanwhile, the best thing for the pound dollar on the short term, and the plan was and remains still bearish. Okay, that's the idea. That's the explanation. Next pound on the list is the pound versus the franc. Bullish for the long term due to the monster we have from the monthly chart and this double bottom. We expect something big to happen, but that's monthly. The weekly cycle here is currently triple cycle to the upside, which means we would like to see this and then buy. No bullish divergence currently on the weekly, therefore the pressure remains bearish. No bullish divergence on the corrective cycle for pound franc, therefore The pressure currently remains still short-term bearish. This is what is building up, and very likely we should see one more push lower. So pound franc short-term still sells. Long-term we are only after buys. Ideally 130, 128. Pretty much the levels that fit with the pound versus the dollar. Which makes sense because dollar versus the franc is almost 1-to-1, right? So that makes sense, of course. So that's for the pound franc, pretty much simple. In order to be able to trade that, we require the corrective cycle on the 4-hour chart, which is currently building up as a range. So what could happen here is easily one range attempt for 2, some false break here and bearish continuation, and alternatively some kind of breakout, 2 waves retrace and continuation. So that's the 2 setups we need to see for the pound franc happens. One of them is going to be triggered. The best would be this. I am kind of doubtful it will happen, but we will see. We will see. I think logically we should see this. Logically, but logic and reality not always go hand by hand. So we shall see how it develops. For us, short term, sell rallies. Long term, buy the new lows, ideally below 130. Next one on the list for the pound is the pound versus the yen. Another pair exactly like the euro versus the yen. Same with the pound versus the yen. We don't have cycles. That was the last cycle we had on the weekly. 38.2 reached. Then we got this cycle. 38.2 correction here reached. So nothing in play with the weekly. Daily cycle, we got triple descending, sorry. So 50% could be the target in play, and guess what? Reached, cleaned. So the game is over in terms of cycles. If we don't have cycles to work with, what do we have is the combination of the divergences. Weekly last divergence is bullish continuing between these 2 lows and these 2 rallying lows. Daily last divergence is bearish, hidden. Weekly and daily show different things. 4-hour chart last divergence is range and kind of bullish. So what do you think is stronger? Again, there is no combination here. But here what fits now is weekly with the 4-hour chart. So there is a good chance that the momentum would turn to be bullish. Pound yen, nothing obvious, nothing clear. The only good thing to trade in such situation is when you have 2 time frames combined. It could be weekly with the 4-hour or daily with the 4-hour. Whatever the combination you have in terms of divergences, then you drop lower and you find your setup accordingly. Okay, so pound yen completely both directions are in play. No cycles, no specific levels. Not the best pair to focus on. Pound versus the Canadian is our next of the pound. Now here it turned to be from one of the most amazing pairs that was on the period we were selling. I want to remind you quickly, this is our play out. That's what we got here. Double up, triple here, triple here. We were short and we reached the final destination. The final destination was 50% of all that. Once that reached game over in terms of the cycles. When game over is in terms of the cycles, we are working also with the divergences. Now look what happens here. The answer is very simple. It fits with the EuroCAD. The last divergence on weekly is what? Do we have anything here? No. Why is it not moving? The last divergence here of the weekly is bullish hidden divergence between these two lows. That means that if we want to sell the daily has to be two waves correction or a range. Does it have two waves correction or a range completed already? The answer is no. Therefore, pound Canadian is still bullish on the short-term momentum. For long-term momentum, it doesn't have anything clear because this cycle, double cycle, reach the target. This cycle of the weekly reach the target. Nothing we can work with the weekly. Therefore, it's only short momentum. And currently, with the way it developed, this is still bullish. That's what we got on the previous week. And on the discussion of, I don't remember when, I think it was Thursday, that's what we said. We want to see the push which can take us further. The question is, how much further? According to the daily cycle correction, this was a special cycle or triple cycle, which means we can go all the way up to 50, which means 177 is a possible target. 38 to 50 would be our zone. That's the cycle, the last cycle from the daily, which means we are aiming here. So buy retraces would still be the plan. The invalidation plan for that would be if we break this low. Invalidation. Okay, this is the low of the invalidation. If we break below that, that can change the cycles here. As long as didn't, the plan is bullish. Short term only, which means drops and look for buy setups. Okay, that's for the pound versus the Canadian. Pound versus the Aussie. Weekly. The weekly cycle was double here and double here. Each of the legs was double, which was pretty much good. Of course, we can also say it was triple ascending, also in play, no problem. Meaning we are for good correction. If we drop Fibonacci retrace on this cycle, 38.2 was reached, 50 in case of triple was not reached. So this is still a very, very possible play. In order to try and fit that with the daily, we need to drop to the daily and find a cycle here. Do we have any specific cycle developing or developed here? Not really. This is what we have. Triple ascending, right? Which means we are aiming towards 50% of this leg. Reached. Again, game over. No clear cycles combination in many pairs of current market conditions. That means our play is more to the short term. Same with the pound versus the Aussie. What is the last divergence of the weekly? Bullish hidden. What is the last divergence on the daily? Bearish hidden. No, again, you can see that. No combination. The last divergence developing on the 4-hour is bearish. Continuing. We need to find the levels for that. In order to do so, we need the Fibonacci expansion on the current correction. We have the 100, and then we have the 161.8. Let's fit that with the daily cycle, and we get ourselves good magnet area. Magnet area number 1, magnet area number 2. That's the places where we can look for sell reversals. In order to have that completed, we need turnaround, which means false breaks, lower lows, and then we are possible with sells. For more aggressive, after the false break, can go with the trend and breakout. That's the only combination. Aggressive trading means mainly low risk trading or lower risk trading. Okay, from the normal one we do. So pound Aussie, is bearish. In that case, we will be looking for possible sells from these mentioned areas, and only for the short term. Okay, only for the short term. Next one on the list is pound versus the kiwi. Pound versus the kiwi is a pair that, from my point of view, is one of the most interesting. Why? Because of this. That's what I would expect here. It's scary to think about it, right? There is one problem with that. Swap. Right? The same commission we pay overnight. It's pretty big when it goes with the pound, when we go against the New Zealand. Okay? So what do we do? What can we do in that case? First of all, Islamic account, which means swap free. Second of all, timing. Timing means combination from weekly and daily to be both bullish. So this is one of the cycle options we have here, special. This is the second cycle option we have here, double. Both are of course acceptable, but that means we need the corrective cycle. Corrective cycle means that we require to reach to 38.2 or 50. From here, buys. The alternative is of course a range, right? So not two waves push, but a range, which we also have. There is no divergence in the building cycle. That's why from my point of view, I think pound versus the kiwi can still, should still make one more push, ideally to this area, where from, once this divergence completes, and we have our combination with the weekly and the daily cycle, this would be the best place to buy. Another thing is, look at the creation of this first leg and the second leg. Look on each of the red legs, and you would figure out that, look what we have here, 1, 2, 3, 1, 2, buy ideal, 3. 3 tends to be, it was pretty long on the first one, it could be pretty long on the second one. We complete that, we have a clear direction. Meanwhile, as long as we don't have that, pound kiwi is completely tradable in both directions and short term only. To do so, once again, we need a combination between weekly to 4 hour or daily and 4 hour to find these divergences and then trade direction. Currently the 4 hour chart has only this. Can you say this is the best one to trade, guys? We both know the answers. So pound kiwi, definitely acceptable for both directions, tradable, not the best conditions currently. That brings me to the dollar pairs and then the Pacific pairs. Dollar versus the yen, as long as it is holding the weekly trend line, the weekly bearish divergence, we are after sells. Daily has for us triple cycle up, special cycle up with a ranging correction. Our zones for sell here, and with one more false break around the 112, we are looking for sell setups. So dollar yen bearish, looking for sell setups as long as the weekly trend line holds. Dollar versus the franc. Now this pair we were bullish on. We were looking to go and get the buys, and we got them finally with this bullish hidden divergence previous week. The question is it able to continue take new highs? Honestly, this pair is anything but clear from my point of view currently. No specific cycles, especially weekly and daily combination. Nothing specific on the 4-hour chart, nothing valid on the 4-hour chart, and that's why for dollar versus the franc, at least from my point of view, there is completely nothing to trade. No clear directions for the long, no clear directions for the short term. So from my point of view, it's neutral. Definitely both directions are tradable here. And I don't see no cycles, no divergences combination. Really nothing for me. This bullish view that we had on the previous week paid, and paid beautifully. Now, nothing clear. So for me, dollar franc is better to stay away as per direct exposure. Dollar versus the Canadian reached the 132, 133 area that we wanted, which means get ready for sales. We don't have yet any reversals. The reversals should be on the daily or the 4-hour chart. We need false breaks. We don't have any false breaks on the daily. We don't have any false breaks on the 4-hour. We don't have anything like that, or lower lows or trendline breakouts, nothing. So on the short term, dollar CAD momentum is still bullish, but the area here, we would very likely face false breaks and turn around for sales. It's not there yet, therefore dollar CAD still currently remains short-term bullish momentum. The area is critical and very likely to start and provide the reversals soon. Aussie versus the dollar, a bit of specifics. Aussie versus the dollar, basically the plan was simple previous week. We were after buys. That was the second cycle confirmation, trend line, buy zone. So what we wanted to see is two waves, breakout, and new momentum to fly. But then came Trump and China, and with the tariffs they start to throw on each other, the first impact is of course on the commodities and the commodities pairs. We know how important it is with Chinese export. Sorry, and we got that drop to the downside. Since the moment of the trendline breakout, the momentum turned bearish. The question is, how far can the drop, if at all? So to answer this question, we are going back for the long term. The long-term cycles for us was the double, so we were expecting something like that. And it is still possible in play as long as we are above the invalidation area. There is a trend line. Let's draw it better a bit. There is a trend line which is still in play with all the spots here. So to make any decision on the long term, it's pretty much impossible. The momentum is currently bearish. There is nothing bullish from the weekly. No bullish divergence. No cycle. There is no daily divergence. No false breaks. No turnaround. Therefore, for the Aussie versus the dollar, the plan is short-term trading only. As you can see, we can't fit any cycles and divergences from higher time frame for the long term. Short-term only, and it's bearish. So rallies are still for sales. Next one on the list is the Aussie versus the franc. Aussie versus the franc is very bullish for the long term here, due to this channel. That's what we want to see. That's for the very long term. Weekly has nothing for us besides a range. And daily, on the same time, had this range, which is breaking to the downside. Now, the idea for the very long term was for buys. We never managed to get any reversals to the upside yet. Never managed to get any of the breakouts of the range. So this area becomes very possible in play. So Aussie franc short-term sells is acceptable. We have no reversal signs currently, nothing to stop this move down. So the bearish correction is still on. For the long term, we will still be waiting for new lows and buys. Meanwhile, on the short term, Aussie franc remains, as I just said, bearish. If you drop Fibonacci expansions on the current developing cycles, this is the 100, irrelevant, because the first leg is shorter than the second. That brings us back to 161.8, very likely. And of course, if you drop this Fibonacci expansion on the big cycle, you would get the 161.8 in same place exactly. That becomes the real magnet zone, unless there will be any kind of fundamental turnaround with the speeches or the rate decisions or anything like that. The pair remains short-term bearish. Aussie Kiwi reached critical levels 107, 106. We are bullish here for the long term due to this range and the special cycle. So we are after buy drops, which means every time weekly and daily would fit together, we are after buys. The weekly currently, besides the pattern, has no cycles, no divergences and no cycles. No bearish hidden, no bullish, nothing. So weekly doesn't help us, only a pattern. The daily last divergence developing is a bullish hidden. In order for the bullish hidden to fit, it has to form with the 4-hour chart divergence. And boom, here comes the 4-hour chart divergence. Now, in terms of the 4-hour chart correction, we are on the 100, which is good. And the next level is around the 106 zone. This is the first clearance area we have. This is the second clearance area we have. We want to see that ideally dropping here, and we are after buys. Look at this, the first cycle, look at the second development. This is the first critical area, this is the second critical area. That's exactly why these are the reasons we want to see the turnarounds. In order to complete the turnarounds, we need one of the two things to happen. First, trend line to break. Second, last high to break. Trend line breakout is a more aggressive approach. Last high breakout is a more conservative approach. Happened, we are good for buy retraces. Didn't happen, the correction is on. So 107, 106, that's our levels. That's where we'll be looking to buy from. Meanwhile, short-term sales could be acceptable. I would not be dealing with them, to be honest. I think it's pretty much risky. They are acceptable, of course, due to the fact we have nothing that confirmed the bullish synchronization yet. Once we have that, we are in buys. Meanwhile, let it form itself. It most likely will take some days more. Aussie versus the CAD. According to the weekly, we have huge range and a channel. Currently, exactly on the middle. So the weekly doesn't really help us with nothing. No divergences, no cycles. Daily, triple descending bearish cycle and a double wave correction. Do we have any kind of cycle on a daily? We had triple cycles, so 50% should be reached. Double cycle correction means 38.2 of the rally should be reached. Do we have any cycles in play? No. So the only way to play that is divergences combination. Weekly we said we don't have any clear divergence in play. We are stuck in the range. Daily last divergence was bearish hidden. We don't have any bullish yet. Therefore, 4-hour chart should provide us sells. So if we get the 4-hour chart bearish together with the daily, we can sell. If we get one more low, that would fit in a 4-hour chart bullish, and by then the daily should also complete a bullish hidden divergence. In that case, if we get a move low first of all, then that's what we have to play with. 1, 2, and this would become the buy zone. Okay, so Aussie CAD, no cycles, nothing for the long term. Short-term directions are, as you see currently, are completely good for both directions to trade with the last momentum. Always, always, always go with the last momentum. Nothing clear and obvious in that case. And you can see that, guys, many pairs, very likely is because of the summertime. Very likely. Summertime is here. Traders and big money starts to sit on the fence, waiting for the next thing to happen. Draghi said, let's see in September and October with the quantitative easings. The Fed raised the hike the rate and said, okay, now we will see for the next. So very, very reasonable period for such movements. What does that mean for us, the traders? If we cannot fit in synchronization of cycles, or at least of the divergences, we do not want to trade it. And in such cases, trade less means have more possibilities to make more. Try to force moves is the worst thing trader can do in such conditions. To say it has to move means close the eyes to the reality. No, it doesn't. It's only us, the traders, that convince ourselves that it has to move. The reality is different. If you cannot fit cycle synchronization or divergence synchronization, that means there is no big money involved. If there is no big money involved, you don't need to be involved. The chances are against you from the very beginning. Remember that. Aussie versus the yen. We were bearish for this pair. We remain bearish for this pair. We trade sell for this triple double scenario. For us, it was sell the rallies. It was and remains the plan for us. Okay, that was the last daily development. And the last breakout was, well, it's very impressive, to be honest. It was right here. And it was very, very massive at that point. Here we got a new high, we got a convergence, so we have it in play. So it was and remains sell the rallies for us. Bearish, in simple words. Setups, of course, for our with daily combination. Once we have them, even 1 hour can be traded. New Zealandian dollar. Still inside the range of the weekly. Still around the bottom. Nothing in terms of cycles from the weekly. Daily, this for us might develop the last leg for us with this special cycle, and that makes tons of sense. Look at the first move here, right? 1, 2, 3. So it makes tons of sense in that case, right? The last divergence on the daily is bearish hidden. Once we can fit that with the 4-hour chart, which currently is bullish hidden. So we can't really fit that, right? Once we can fit the daily and the 4-hour chart, this is the one we can trade. Like in the range case, right? At the top, of course. So once we get the combination bearish, bearish, we can go and look for the setups. For us, the plan was and remains short-term sells. New Zealandian versus the Canadian. Annoying, one of the most annoying pairs, but bearish for the long term. The reason is this cycle we are aiming to the bottom of the range, and the reason we are aiming to the bottom of the range is because the monthly is triple cycle for us. So we won't see the drop to the downside. Weekly has nothing in terms of cycles but the range and the fact we want to sell. Daily is bearish hidden. 4-hour chart is bearish long term continuing. We have everything here for the confirmation. We don't yet have lower lows. That's the only thing missing. The moves are ugly, and when it goes like that, you understand no money is involved. Get the correction, unless you want, of course, the investment is very good here to be for sales. In terms of regular trading, we need lower lows. Lower lows created, we have the okay to start selling. We never got any lower lows from here, 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 and here. Never yet. Lower lows after false break. Therefore, nothing conservative to trade on this pair. The direction is bearish, of course. The way it develops gives us only two options to trade. One, sell, invest. Second, for the regular trading is wait for the lower lows and then look for the setups. New Zealandian yen is the last of the New Zealandian pairs. Same story like the Aussie yen, bearish inside this cycle. Also had this for us, triple, double, we're in sell. Kind of bearish here. Range still has the room lower according to weekly cycle. Daily, the last divergence is bearish hidden, but there is problem. It was a cycle here and a cycle here and a cycle here with a bullish divergence and bullish convergence. So Kiwi yen has controversial signs. From one side, only bearish. From the other side, acceptable correction. And this is exactly the plan to trade it. Long term, sell the rallies. Short term, we are still accepting these rallies to happen. This could become the zone where we would face some retraces, and after that we would want to look to sell them. Rallies with new highs, great for sells. Drops with bullish divergences, good for the short-term corrections. Any question about any of the Pacifics? Perfect. So the last two we have here on the list, CAD yen and CAD franc. CAD yen, very simple, exactly like the other yens. Well, not all the other yens. It's mainly coming from the commodities pairs versus the yen, Aussie, Kiwi, and the CAD. A triple, double, possible range. For us, the plan was sell the rallies, and it still remains the plan. This is the weekly cycle, so the setups must come from weekly daily combination with a possible 4-hour chart entry. That's all. Bearish it was, bearish it remains. Sell rallies. CAD versus the franc. For long term, this pair is buy for us due to this cycle, so we want drops and further continuation. Currently, weekly last pattern we have is channel, which means from the bottoms we can look for the buys. The daily in that case, sorry, had a special cycle. Now forming a second, forming a divergence. It already has bullish hidden, turning it into continuing. 4-hour chart already, of course, confirming that, with the regular divergence turned to be fake convergence. So basically what we require here, same story, turn around and higher highs. Once we got them broken, we have the conservative setup. As long as it didn't, we can't trade conservative, we can trade only aggressive setups. Aggressive setups would be available, for example, if we get this new divergence here in play, and then trendline breakout. That's an aggressive setup. Meanwhile, short-term corrections could still push that lower. We don't have any turnarounds. Would I play with short-term sells in that case? Honestly, no. I wouldn't go against the daily divergence when the 4-hour chart is about to complete the turnaround. So for me, it's on a waiting list for buys. And that's all for the Forex view. Commodities. Natural gas, we discussed about it. Cashed out the partial investment we have. Those who were not here in the beginning, this is what we have here. That's our divergence. Good level, good buy from February. Time to make profits. On the first case, we expect pullbacks in 2 waves or a range, and then further continuation. That's going to take some time, most likely. Gold. Gold is, well, I would say it very simply, setup less. No setups. According to the weekly, we would want to look for the buys. Basically, well, it's coming from the monthly even. This was our last cycle here. This is what we would expect. We still have the room for 50% retrace. Okay? However, there is a chance that this is just some kind of wedge before continuation. I wouldn't build on that, to be honest. I think bulls are still more possible and powerful. According to the weekly, we have a trend line, we have a bullish hidden divergence developing. Not developed yet, developing. Daily starts to create its own divergence, which is good. Our levels 1280 and 1260. Possibly 1240, early to judge. Too early to judge. Meanwhile, there is no setup for buys. No false breaks, no trendline breakouts, no higher highs, nothing. So gold and silver short-term sells until the moment we get our buy setup. False breaks, higher highs, we are back to buys. Meanwhile, short-term sells. Silver, I wouldn't deal with that at all for one reason, and this reason is this. I have no read here in that conditions, really. I have no read in these conditions. So for me, silver is looking for the buys for the long term, short term, simply neutral. Oil had a double cycle for us here, which means we are bearish. Sell the rallies. This is the weekly cycle, so the daily has to fit in, which means has to create for us correction for bearish hidden divergence. Do we have it? No, we don't. And meanwhile, 4-hour chart has for us triple descending cycle. So oil short-term corrections are acceptable, which we will want to go and to sell later on. Long-term sells, short-term acceptable for buys and the turnarounds. The best ideal place, of course, would be back to previous highs. Okay, from there we would be looking for our setups for the long term. Indices. German DAX remains neutral. Meanwhile, for one reason, weekly is still possible head and shoulders. However, the daily invalidated it by making a false break over the trend line. Now it's a possible bearish double top, definitely, but we don't have any new lower lows or new trend line breakouts. So German DAX currently is neutral. Nasdaq, we are on great levels. We know that. We discussed about that. We are looking for the second false break to form and complete. This is the weekly cycle. That could take some time. Daily does create a divergence by itself, and the 4-hour does create a possible setup for false breaks. But we do need to go below this low. The reason of being this low and not here is because there is no divergence between these two highs. So we do refer to the first high. As you can see, no setup currently here as well. So indices are simply not tradable with all the wish on earth. Okay, and it's important to remember that. Cryptocurrencies, Bitcoin completed the cycle for us from the previous week, and this is a cycle by itself. Now the triangle is broken, the momentum seems to be back, so we are bullish. This is for the Bitcoin, this is for Ethereum, which basically fits the same. Of course, you don't need to, this is also a cycle, no need to trade them all, just choose the one that fits best in your strategies. I can keep going and going over all of them, Litecoin, Ripple, everything, but they all the same. Okay, so this is the idea we have. This is Monero also doing the same. This is the Zcash doing the same. You can see always in all the time frames, in all the cryptos, same triple cycles ending with the triple cycle leg and here with the last momentum breaking. So that's a good possible beginning of the rally. So they are bullish. Again, I'm not going to cover all of them because they all pretty much are the same. They will appear here in the report as per setups, but basically Bitcoin, Ethereum, Litecoin, Ripple, Neo, and Monero are the best, and big cash versus the dollar. Oh, sorry, this one I didn't show. Where is the big cash? Here is also, well, again, all the same. Okay, and here is a cycle. So we get the momentum. That could be a good beginning for some bullish run. Invalidation is the most important, and invalidation for us would be the last lows. So that's our full weekly long-term plan, guys. We are follow that up. John, thank you again. Oh, thank you very much. Thank you very much, John. Well, we do these sessions exactly for that. So the entire week is prepared. Everything is explained on the table, transparent and clear for everyone. So that's the idea. Thank you very much for your feedback, John. So that's all for now, guys. Thank you for your focus and your attention for the long session. Now you deserve some rest with England and Tunisia match. So enjoy that. I wish everyone a wonderful trading week. I'll see you tomorrow and in the Telegram groups. Bye for now. Thank you for being here.